Welcome to Insight from EWI with Brian Whitmer. Brian, the improvement in the stock market has made investors consider risky options again. Do you think this is a good idea? And where do you think the stock market is going?
I think now is the wrong time to take risks in the stock market. And I say that for several reasons. First, the FTSE 100 for months now has been stuck below a long-term resistance line. Second, the DAX has approached a long-term upside target based on Elliott Waves, which is the model that we use for forecasting. Most important, though, is what's happening on a near-term basis, which is that every time stocks rally for a few weeks, we see investors shift almost immediately from pessimism back to extreme optimism. For example, trade-futures.com shows that trader sentiment in the DAX reversed from just 3% bulls at the lows in October back to 92% bulls last week. That's one of the fastest turnarounds I've seen in this index, and it's the kind of quick switch in sentiment that has signaled market tops in the past. So we've got three things here. We've got long-term resistance, we've got complete Elliott Wave patterns, and we've got overly complacent investors. And that's a bearish omen for stocks as we end 2014.
Investors shy away from making any serious portfolio changes in the winter. What is your advice to keep investments buoyant?
Well, that depends. My advice, first of all, would be to focus less on staying buoyant and more on just keeping afloat. If your portfolio is loaded with risky stocks right now, or risky bonds or risky currencies, my advice would be to go ahead and make some changes. Specifically, I would throw out most small cap stocks, which peaked in February. I would throw out any low-grade corporate debt, which peaked in June. I also think it's a great time to sell most sovereign debt. On the other hand, to investors who have already used this rally to offload their riskier assets, or for those investors who are sitting primarily in cash positions already, then I'd say great, stay put, don't make any changes at all, because there will likely be some great buying opportunities in the years ahead.
The Eurozone economies continue to struggle. Is there a serious chance of the bubble bursting again?
Yeah, there is. I think it's a near certainty, in fact. In terms of the economy, the bubble has already burst. 8 EU countries are mired in deflation right now. 4 more countries show flat price growth. None of the 28 EU countries show inflation rates above the 2% target. So deflation is winning despite actions of central banks. But you bring up a good point, which is that despite all this deterioration in the economy, optimism towards stocks is at record highs. And not only that, but most bond investors also show tremendous optimism or complacency. For example, French and Italian yields have fallen to multi-year lows while unemployment is pushing to new record highs. This is I think another byproduct of this ebullient environment. Bondholders assume that these governments can pay their debts, even as their economies show really depression-era weakness. So that's another dangerous assumption, in my opinion, and I think that divergence will be rectified with another major downturn in stocks and sovereign debt.
Finally, is there any positive news across the market?
Sure, there's a few things. We think that the US dollar is completing the first leg of a long-term bull market. We also like gold at the moment. Based on lopsided bearish sentiment toward gold, it's sort of the opposite situation from stocks. So even though we've been bearish for years, we think that gold made at least a tradable low in November and should continue higher. In that same vein, negative sentiment toward the euro is extreme. So again, even though we're long-term bearish on the euro, we expect at least a snapback rally to begin soon. Also, just to make a broader point, positive news doesn't have to mean that a market is moving higher. Short sellers in Greece, for instance, are seeing lots of positive news lately. The market is crashing. Same thing for investors who sold oil futures this year, or copper, or iron ore. How you judge the news obviously just depends on which side of the market you're on. But more to your point, we think that yes, the financial news will likely get very negative for most people in the months ahead. But that said, that same news will be quite positive for investors who are out of risk assets, who are sitting in safe cash positions already.
Thanks, Brian. Check back for further EWI news. Goodbye.